Welcome to TradeTheNBI.com. This is John. This report is for the 29th, and well, started out with that huge push, got right up to the 61%, and they pretty much just let the air out, and we just kept sliding back. Nothing particularly new that we don't already know. Just a little bit of softness as a little bit of short activity increased. However, we're still seeing rising red, rising green, steel, improved shakeout, so nothing has changed as far as that goes. Intraday, we had the 50K that sold out of its position from a couple days back, and I don't think it was enough for the ATR. No, it wasn't quite enough for that one to get over the hump from a daily standpoint. But, it's part of the continuation of, back and forth that we're seeing as far as ranges go. It's just a matter of, looking for the next level that they support at, and people trade then off of it and continue to float basically until they're done with their algos. And we see that with the positive extremes. We saw it from the intraday action that happened early on. From the NQ standpoint, also rejecting off its 76, coming back, and you can see there's that pop of the cyan. So whether shorts believe that that's going to be the end-all to be-all to stop it, probably not so much from a NASDAQ standpoint here when we have that rising gold. But we'll continue to pay attention to it, of course, because we've had the steel reset. And what I look for in this particular case is if orange breaks back out of the range, which it's almost doing right here at 195 to 190. When it does that, you sort of lose a continuation, which is what you have when you're caught between the two of the red and the cyan with the orange. And that's kind of what we had. It was just a soft continuation to the upside. From a euro standpoint, again, holding it right on the line. Beautifully done. It was pretty bullish. And of course, oil, now the ETFs are breaking from actually holding the contracts, and so they're going to be more loosely associated with actual oil prices, simply because of this flip to negative whenever contracts are coming due, because nobody has a place to put anything. And that's a real interesting dynamic, and part of that force that really wants things to start getting activated, because it's the only way you're going to diminish that massive supply. I mean, there's a dozen plus ships waiting out on the coast of California, all of Texas area, and that has been filled up. It's going to be interesting to see what they do. I don't know how quickly the U.S. will be sucking its version for the petroleum reserve, but we're looking at it more from an inflationary standpoint to see when and if energy prices rise enough to generate that. I mean, at this point, with things so depressed, it's probably the only saving grace right now is to have low energy costs per se, while there's so many unemployed and not participating in the economy and throwing money at it. I mean, there's a big difference between income versus actual earned income, and right now people are having their income derived from either unemployment benefits or government handouts. It's short-term sustainable, but we're going to start to see as May rolls around, and we'll see what happens with rent payments and with credit cards and things like that, and whether or not broader credit freeze begins, and whether or not there's a significant increase in delinquency. So those are things that we'll be looking for. And I think at that point you'll also see gold make its resurgence. Still cyan, just a little bit under red right there. You can see 314 to 0.26, so it's still maintaining that. A complete reset of short-term buyers, though. So as soon as they activate and get back into the game, that's got a whole other potential leg coming up from it. Now this is the end of day action, but if we go ahead and take a look at the early day, we started with our positive extremes that were right about this level, and then boom, we began the next series right there. As we peaked out, which was interesting because it was literally not that far from the open, that we were up at the peak portion, and that's when we started to see cyan break across here with the first magenta. It held on for a little bit, but what was nice about it is you had the steel come back above and then the cross below as it gave another secondary one, and that one literally led to a stronger move. We saw it with the Sigma move here on a declining setup. So it had rolled over far below the previous one, even though we were pretty close to the same price, and that led to much more consolidation. We had a decent potential configuration there, but it spidered really quick just after a few bars, and then that led to much more pronounced decline, and that's what we see when we start moving across there, and then you get that separation, and then of course what did you end up with? Orange stuck right between until boom, right down here, and that led to getting a nice uptick. Action was much more even and slower, so we're starting to see more normalization of they're just looking for those areas where they see support build up, and that's what you react off of. And that's where we see these little in-between runs in between. And the same effect here. So Sigma coming off of that decline. This one was a little bit softer, and so when I talk about a Sigma event, I'm expecting to see something that's well over that 25 range for a real strong move, and that's what you got here when that took place right over this one on the dip, and that led to a move all the way back down to the 0% line. And that's what we've based off right there. Now you get potential positive one building at this particular point. As we've matched the lows. Did have the dip below the red line. It did match those lows already, so that's been satisfied from an intraday standpoint. All in all, happy with the actions. Just working on making these adjustments when it comes to these no steal reset setups so that we convert, like in this particular case, it will flip. You'll have those few short bars, then it'll flip to the red and stay that way. And so when that cleans up in the pink bar, that's going to be really nice and make it easy to follow from a consistency standpoint. But we're pretty clear on what we look for from those things, particularly when we're seeing such a strong rejection of cyan to green, and then it dips below, and then red obviously below the this, where it's always a good one too to also see that white in this case, because that dip below the white really strong, and even when you got the cross back above of green and that, it still wasn't enough to dip down, unlike the secondary one, which happened to be right at that bottom. So that's something to look for when you're watching intraday setups. Indicator renewals will be going out, so you'll be all set for this midweek flip over for the start of May. And as always, I will keep posting charts on the Skype chat. Anything interesting that pops up, I will certainly let you know. As always, trade well. We'll talk to you later.